So, guys, I don't know about you, but to me, it feels like the markets are in absolute FOMO mode right now. I mean, crypto's gone up in a straight line for the past month. What are you seeing on the stock side? Is the vibe the same or is it different?
The vibes are good, baby. The vibes are good. Unless you're
Are
a
the
Tesla
vibes
investor.
immaculate?
The vibes are immaculate unless your net worth is fully in Tesla stock. That seems to be one of the only things that isn't participating in the current bull market. We've even got things like gold and commodities breaking out. You've got, sectors of the market that are just on fire still, like AI. You've got stocks like MSTR that are crypto related that are going up parabolic mode. It's definitely bull market season for sure.
I'll show you this tweet. So this was the other day, actually a little over a month ago. I surveyed people on Twitter and I said, will Bitcoin hit a new all-time high in 2024? And 49% said they agreed that Bitcoin would hit an all-time high again this year, and over 50% said no. So think about that. Just a month ago, over half of my audience, which is obviously extremely crypto centric, didn't think we were going to see an all-time high. And from that moment, we went from like the 48 or the 50K zone to over 70,000. And what I was thinking about, and this is what I followed up, I said, I think we're just getting started because there's very few market participants in this cycle so far. This was driven a lot by Wall Street, and there was still a lot of disbelief from retail who got screwed by FTX last year. And yeah, I don't know. I just feel like there's more pain than there is greed right now, because the people that were in this trend were, and shameless plug, people in our wealth building community when we were accumulating in the lows and buying breakouts and dips. But mom and pop retail, I don't think they're here. What do you guys think? What are you seeing out there?
I think
If you quiet.
I think we're starting to see signs. Like if you look at like the Google search trends for Coinbase login, they're going up and to the right pretty quickly. So we're getting there, but I don't think we're near the top. Like I'll give you one signal that is a little bit toppy. And that is the fact that I put a couple $100 into some shit coins like Geo Bowden. So maybe we're there. When stock guys like me start putting money into shit coins, maybe the end is closer than it is far away. So
I feel like on the stock side, the FOMO is going exactly as I anticipated it. Like I talked about this ad nauseum for last year, talking about how we could see the all-time highs hit unexpectedly, and then all the money market mutual fund money that's sloshing around out there still that is seeing these S&P returns. They're like, oh crap, yeah, I'm getting my nice cushy risk-free yield over here in treasuries, but the S&P just ran 20+%. So it's like they're going to be looking at that, and then as the market makes new highs, there's that capital that's there on the sidelines that starts to FOMO in. So I feel like on the stock side, a lot of this run is that it's just this FOMO and this just constant stream of buying because there's capital there to do it with, and they don't want to miss out on the returns. On the crypto side, it kind of feels like things have slowly been awakening. It's been very weird to me how, like you said, Trav, now you're buying shit coins, and that's the start, right? And we're starting to get the text messages and the, hey, what are you doing with your Bitcoin? And our friends asking us about Bitcoin. But it's felt like a really slow start to the mania that we're used to seeing with crypto. And maybe this means that Bitcoin in general is just maturing as an asset. I don't know, but it's definitely been a little bit different.
I just got to say how proud I am of Travis from going from a hedge fund analyst at one of the top performing hedge funds in the world to a shitcoin trader. Welcome to the community, buddy. Welcome to the party.
Yeah. Hey,
You've
listen,
made it.
I've been a long time Bitcoin hodler, as you know. We were talking about
Yes.
Bitcoin back in 2012, 2013 days. But yeah, I'm new to the shitcoin train. I'll tell you something though. I think I have a growing thesis around this that, there are there are some things happening in that universe of, like shit coins basically, or meme coins, that I think is still potentially early in this bull phase, because most people don't really know that some of these things exist. I mean, of course, traditional shit coins, especially on other chains like Ethereum, have existed for a long time, or, the smaller coins that we've had forever, like Dogecoin, things like that. But there's this whole like universe below the surface now of meme coins that are being created on a daily basis that are gaining tens of thousands of %. And they're actually quite easy to get access to and to trade through, things like Phantom wallets or whatever. So there's this potential, I think, for this thing to get really, really silly. Maybe we're already there. Maybe it's already just too silly, but there's also, I think, a lot of discovery that can happen from normies of this whole universe of crappy assets that can appreciate at just ridiculous rates. And so that's kind of why I was playing around with it, just to better understand it, to see maybe there's something here. Maybe this is where the next GME will happen. Maybe it'll happen in the Solana shitcoin universe, or maybe it'll happen in crypto rather than, in stocks. We'll see.
Yeah, I mean, Solana's been a great performer for us. I'm still holding half of my position. We're actually getting another breakout today. And yeah, that whole ecosystem has just been doing really well as far as like trading volumes. And I don't know why my charts are loading here, but there we go. So yeah, I mean, we actually got a question. So I did a call for questions on the old Twitter, and somebody asked, well, with the current buying from ETFs, what could possibly cause a large drawdown in the Bitcoin price? To be honest, it seems like up only until the buying cools off. So yeah, I mean, I think that's a good question, and it's a relevant question, and it's important because a lot of people do start to think that way when things look really good, and that's where over exuberant bullishness comes in. And what happens, Nikki, when the markets get overly exuberant and everybody starts saying up only?
It goes down.
Why does it go down though?
Because all that exuberant pressure eventually runs out, and what goes up must come down.
Yeah, and people do silly things like getting over leveraged. And, when the market gets too one-sided, especially in Bitcoin and crypto, it can smack everybody's faces off and give these big washouts. I mean, just to show you the chart here, just from, what was this, a couple of weeks ago, Bitcoin was down pretty massive intraday here on March 5th. It was actually after it tagged and actually broke the all-time high. Intraday, it fell almost 15%. So what happens is, people were buying in anticipation of that all-time high break, put their stops really close, and then they got cleared out. So that's one thing to keep in mind is like, you've got to be careful of these like up only narratives. But with that said, I mean, something that we've been talking about for a long time is how the sustained capital flow in Bitcoin coming from the ETFs, how that can create like just an extreme bull case, right? And we were actually just at lunch today, and I was talking to a buddy of mine who has owned Bitcoin for a long time, but he's not a trader. And he was like, how crazy could this get? And as I was explaining the situation, I'm like, yeah, man, the supply crunch is real. The halving, when we go down and we cut the new supply in half, if the demand stays there, like prices can get to a level that just don't make sense when you compare it to other markets. So I try to think of both sides, right? Like I want to think about the risk of like market euphoria and people just getting too one-sided. I mean, I think that's why we had the bull trap last market cycle when everybody had the laser eyes. I mean, that was just a public display of euphoria, and then everybody got slapped and you had the implosions. But I think the market can cause pain on the upside too. And I think right now it's actually causing a lot of pain because it went from 50K to 70K very, very quickly. And retail didn't even wake up until, I'd say the last week or so.
I would say on the stock side too, like this S&P will not pull back. It just won't. These pullbacks have been incredibly shallow. I wouldn't even call them pullbacks. And that's giving pain to people that want the exposure and have the cash, but they're just, of course they want to wait for a better price and for that exuberance to eventually fade off, just like it did with Nvidia. Nvidia eventually pulled back. And this we see, not that it's not that big in comparison to the overall trend, but eventually sellers step in for a little bit at least. And that's just not happening in the indices either, at least in the S&P 500. And so that causes pain to investors too that have cash ready to go.
Yep. Another question that we got is we actually got a few questions asking about inflation, and Craig was asking, given that inflation has been difficult to tame, and with rates rumored to be cut this year, which still is kind of up in the air, how do you guys think that inflation is going to look a year from now? What kind of decisions and variables should we be considering to make sure that we maintain a no regret strategy? Great question, Greg. Craig. So taking a look here at today's Daily Doe, Trav, I know you wrote about this. The headline is, why is the stock market ignoring stubborn inflation? And, my question is how stubborn is inflation? Are we going to see a big reversal? I know mortgage rates are starting to come down a little bit, but are we looking at like a 1970s type, secondary inflation boost? And yeah, why is the market ignoring this?
Yeah, all very important questions. And, it's surprising to a lot of people that we're still at 5.25% on the Fed funds rate, that we've actually now pulled out price cuts. The market's now dropped the probability of rate cuts through, basically until June or July now, when we had like 7 cuts priced in as early as, starting in March. Yet the stock markets continue to go up. And so if you're looking at the 2022 playbook, you'd think that the stock market would be down on the fact that, rates are not dropping and that we're actually pricing in lower probabilities of rate cuts. But the reality is, the disinflation trend is actually still intact. Like, it looks kind of confusing because you see that the February numbers came in at 3.2% year over year inflation, according to the February CPI. And that was above the 3.1% we saw in January. So some people, are out there saying, oh my God, inflation's reaccelerating, and, we're not seeing low enough inflation. The Fed's target's all the way down at 2%. We've got more work to do, and inflation's rearing its ugly head again. But I remind people in the article today that 1 month does not make a trend. And the most important category within inflation, shelter, we talked about this over and over, it's still disinflating. It's still coming down. And we expect actually that it will reduce the overall CPI below 3% by early summer timeframe. So I just kind of walked through the math of that in the post, showing you that, shelter's 34% of the CPI. It's still printing plus 6% inflation in the CPI. The CPI's lagged measure is saying it's still inflating at 6%. We know if you look at real-time measures like Zillow's ZORI, the observed rent index, that it's closer to the 3.5% to 4% range on a real-time basis. And so once the lagged shelter measure in CPI catches up to real-time measures, which will happen over a couple months, then we will see more downward pressure on CPI. So I know this is a little bit wonky, but basically, it's going to take a lot of inflation in other categories like energy or in services to actually offset that decline in shelter inflation. And if you look at the math, really, it's going to take like absurd amounts of inflation in the next few months to offset that. So 1 month, again, does not make a trend. We did have some categories within services that are a little bit concerning. They're inflating at anywhere from like 4 to 6% in areas like transportation services. That's actually even hotter. That's even up at 9%. We've got inflation in things like childcare costs and financial services. Certainly worrisome, but if you add all of those services all together, it's only a quarter of the overall CPI. And typically in the past, we've also seen that area consistently inflate around 4%. So it's not that concerning. I know a lot of people will take this 1 month of data and try to make the argument that, oh my God, inflation's reaccelerating, the Fed's got to hike rates more. But if you actually just have a little bit of a broader perspective and you look over a multi-month time frame, it looks fine. And that's why the stock market, I think, can look past 1 month of maybe a little bit hotter data, because it knows, hey, shelter's still coming in. Shelter's still way above trend and coming down to its historical level of 3.5% to 4%. It's going to get there if you just play out the math. It's going to get there by July. So yeah, we'll have to see. Obviously, there are things that can happen with, say, energy prices that could spike up in any given moment because of geopolitical concerns. But barring something really extreme and unexpected, I don't think it's really something that we have to be too concerned with.
Well said. Nick, anything to add to that?
No, I mean, I think that Trav nailed it. Yeah, nothing to add.
Cool. All right. So basically, I guess what I'm hearing is, it's a little tick, not huge. Shelter's coming down. It's lagging. It's a major piece of it. And so do you think that we're still on track to lower rates this year and that there's going to be no big surprises?
Yeah, I think that's right. And it probably doesn't happen. The Fed is going to be cautious until they really do see that CPI number coming down below 3. And so it could be a little bit later than in the year than I had initially expected coming into the year. I thought we would see the first cut in the March to May timeframe, but now it may not be until, say, June. So that's fine. Again, I think it ultimately doesn't matter that much. If it comes in, say May versus June or July, it probably shouldn't matter that much to the overall market. But yeah, the general trend is still down, unless something extreme out there happens.
Yeah.
It seems to me, Trav, tell me if I'm, wrong here, if you have a different opinion, but it seems to me like the market is accepting also by this time that, the Fed can't possibly raise rates at this point enough to where it's going to be that big of a change. Like, maybe we get a few quarter of an interest rate reductions, but it's not going to be like we're going to see rates decrease 2% this year or anything like that. I think it's going to be more of a modest decline, very, very little by little. And it's not like it's going to be completely changing the economy in a dramatic way.
Yeah.
So that's kind of my take. So the market knows that, the stock market knows that, and it's kind of looking through all of that because the earnings are still decent.
Yeah, we're looking at lots of leading indicators of the global economy and the US economy, and things still look pretty solid. There's some things that are weakening on the very edges, like things like, job openings are still moving down. Things like we've talked about, the consumer credit card delinquencies are rising still. And there are a couple things like the small business survey, the NFIB small business survey shows a little bit of weakening here and there in certain areas, but that has actually been offset by strength that's occurring in other areas. I mean, look at the UK economy, look at the Chinese economy, look at the European economy generally, and even parts of the US economy are starting to come back. So I think overall, if you take all the data points and aggregate them together, it still looks like a pretty healthy picture. And so I don't see any reason to doubt that, we're in a pretty good place right now. We're going to continue to watching and stay vigilant. Things can always change, but right now it looks okay. And I think the Fed, like you said, Nick, will probably do little baby 25 basis point cuts. We'll get a couple of them. It's not going to change the overall, economy that drastically, but it'll give some relief, hopefully, to some sectors that have been hurt by higher rates, like things like the auto industry where car sales are down. But yeah, I think, if we get the 2-year yield down from 4.5%, 5% down to 4%. Is it going to change that much? Probably not, but it'll be nice. It'll give some relief. I will say this too, people that are calling for Fed hikes, it's kind of crazy to think, but if the Fed were to hike more, not only would they be putting more restrictions on the overall economy with higher real rates, but they would actually be helping the wealth effect, and they would be potentially stimulating the economy in some ways by increasing the interest rates that people could earn on their cash by doing nothing. And so, there's the argument there that Lynn Alden and other people have made that if you raise rates, it's actually going to stimulate parts of the economy. And so that's not necessarily a good thing either if they're worried about things overheating.
Did you see the article about people, I think it was a Wall Street Journal article where they were like, higher interest rates are causing people to have higher tax bills. And it's like, they spun it as a bad thing. It's like, well, they're still way better off than when we were at 0% interest rates. They could just take some of that money that they were paid and pay the taxes. It's definitely something that most people, it'll be negligible for. And the wealthy people that have a lot of savings to earn a lot of interest, they're probably going to be just fine. But everybody is still better off, even with the tax bill, with these higher rates than they were at 0%. So It was just funny.
Yeah, it'll be interesting to see how rates coming down affects things in like Q3 and 4. And I know a lot of people have been asking us both in the community and here on the show about like obviously profit targets. I mean, there's one question that emerges whenever markets are at all-time highs or trending is what are your profit targets, right? So let's talk about where this could go. And earlier Travis was mentioning like some of the Google trend keyword terms like Coinbase login. Like these are good because it represents, you know, behavior from retail. You know, people that are trading on Coinbase are usually not professional traders and might be people that aren't paying attention and are like, oh, I need to log in again. So yeah, you can see compared to, you know, late in the market cycle last time, we're still not you know, even 50% of the way there, but this is a trailing indicator and it is breaking out, showing that, you know, there's definitely interest from retail over the past month or so. And yeah, some of the questions we got are like, what would be the highest price that would not surprise you if Bitcoin reached that in this bull market? And another question along the same lines, how do you know when to sell Bitcoin during this cycle? And at what level do you think you'll start selling?
Oh,
You know, 100K, 120K. And I think one of our writers for the Daily
huh.
Doe actually wrote about this, and she may have done a YouTube video today talking about this. Do you want to talk about
Yeah,
what your video and what you've been talking about?
yeah, it was from not yesterday, not today's dough, but the day before. It was Monday's dough, I think it was. But it was
Oh, gotcha.
basically, yeah, how to know when to sell your Bitcoin, and I did a YouTube
Mm-hmm.
video about it as well. And you know,
Nice.
the gist of it is you have to know what kind of capital that you're talking about selling, right? We have capital buckets. We've got short-term trading capital. We've got short-term investment capital, and we have long-term investment capital. And what a lot of people mess up with this is they try to manage a long-term investment like a short-term trade, you know, or vice versa. So it's very important to go through the money that you have in these assets and say, okay, this is going to be short term, this is going to be long term, and that's the first step. And another thing that I want people to keep in mind is that you have to think about how the money you have made in that asset, in this case, Bitcoin or crypto, how could it change your life? You know, if you're staring at an amount of money that could significantly change your life, even just a percentage of it, like nobody ever has to sell 100% of what they have. And I think that's something a lot of people forget. Like you can just take a little bit of profit off the table if you want to keep some exposure. You don't have to sell it all. And so think about how that profit can help you with whatever goal you're trying to achieve in your life right now. If something can be life changing, then you got to consider that. And then third, you may have gotten into this not knowing what you're doing. And now you realize how much risk is on the table with cryptocurrencies in terms of volatility. There's a lot, big ups, big downs, right? And maybe you didn't know that going into it. And you sat through the bear market, basically about to pee your pants, like on edge, you know, nervous and scared and watching your net worth go down. Well, if you felt a lot of anxiety with having that risk, now's the time to maybe analyze the risk that you have on the table and see if it aligns with what fits you. So de-risking is something that people can consider at certain, you know, certain price levels. You can dollar cost sell. You know how we dollar cost average into assets to buy them? Well, you can dollar cost sell and just kind of, you know, scale out along the way if you're just unsure how high this thing can go. But that's kind of the gist of how to think through if you're trying to make a selling decision. Those are the main things that you want to start with.
Yeah, I couldn't have said it better myself.
Thank you.
I think, yeah, I mean, I'll just add one thing, you know, whenever we're looking at where we are in the current trend and thinking about this cycle, you know, there's three kind of major trading buckets that I have. You know, it's cold storage where I dollar cost average when Bitcoin's in a bear market, put it on a hardware wallet. And then my only goal is to stack Satoshis over time. The second capital bucket is like position or cycle trades, where I'm also buying in accumulation ranges or in bear markets, and then I'm selling during euphoric times. And just like nobody can predict the exact top in a market, like Nikki said, scaling out, we're all a big fan of like scaling out. And then the shorter term trades, like on the way up, looking for bull market setups, breakouts, dips, things like that. And those all have different management styles. And that's something we talk a lot about in the community, is just different ways to manage that. And at the end of the day, one thing we always say is trade in a way that leaves you with no regrets, no matter what the market does. If the market crashes or goes to the moon, think about those scenarios and manage those positions in a way where you won't get hurt and you won't miss the boat no matter what happens. And so I can just tell you for right now, I have some like extreme bull market 6-figure profit targets that I'm holding part of my cycle trades and my swing trades for. And then, I'm also looking at not just prices, but I'm paying close attention to market sentiment to try to figure out, like, okay, when is retail too euphoric, which I think we're in, like, getting pretty close to like extreme greed in the short term right now. That doesn't always mean that like the market cycle's over. And at the same time, I'm also thinking about how this whole ETF thing comes into play, because the old quote is like, this time is different. And we like to make fun about how people say that in markets, but with this market cycle, there is something that's different, and it's the market participants and the capital flow. And so the bubbles in Bitcoin's prior market cycles were driven mostly by retail, where now we have large governments and institutions and these ETFs. And I think there's a non-zero chance that in the next year, there's going to be a government that comes out and says, we've been stacking Bitcoin in a meaningful way. And it only takes one government to do that to create like a domino effect of FOMO. And I'm not even going to make like a prediction of like I think how insane things could get. But just imagine a world where some of the largest economies start rushing to Bitcoin as a flight of safety. I mean, we talk about, gold's market cap, which let me see what the current market cap is today. Right now, gold is sitting at 14.6 trillion. Bitcoin's at 1.4. So Bitcoin is literally 1/10 the size of gold, and it's already started to eat gold's lunch. So I don't know. Could Bitcoin do a 10x from here and play catch up with gold? I don't think that's unreasonable. Is it going to happen overnight? Probably not. But that's something to think about if you're looking for a model of like where Bitcoin could potentially go. So that's what I'm thinking about.
I think that that's one of the important points about long-term investing capital, right? Like a lot of people in crypto and in stocks, they have investments that they don't plan to sell for a long time. And it's impossible to know what the future price is going to be. It's impossible to really put a target on where the S&P will be in 20 years or where Bitcoin will be in 20 years, right? Like, so I think that there's always going to be a percentage of capital that people have that they're just kind of holding and just like seeing what happens. And I think that's okay in the sense of Bitcoin being such a growth asset, such an emerging asset. I think that that's okay. But again, it goes back to what capital bucket are you looking at and managing that properly.
Yeah. Another thing I wanted to ask you guys about, I've been thinking about this deeply too, and I think this is a good question. Excuse me. Somebody was asking, how likely or easy is it that the gains made with Bitcoin ETFs will flow into altcoins? And this is something that we see happen fairly predictably with like spot Bitcoin from exchanges. It's like step one, Bitcoin goes up because people buy Bitcoin. Step two, when Bitcoin pulls back and people are selling Bitcoin, a percentage of that doesn't just go back into dollars or fiat. It actually trickles down the capital flow into other altcoins, which that happens pretty quickly. And I don't know, I was thinking, like, is any of the ETF money going to flow into alts, or like, are the people that are buying the Bitcoin ETFs, is that capital stickier? Is it like they're buying those ETFs and that is more in long-term capital buckets? What do you guys think?
The latter, I think.
Yeah, I think, we look at what's happening with the potential ETH ETF approvals, and it seems like the probabilities are much lower right now on those. And, we've seen a lot less activity from the SEC from their side, for instance, in engaging with the Ethereum ETF applicants. And so it does seem like, you mentioned it before, it's a new dynamic to have the ETFs and more the institutional participation in Bitcoin. And I don't think we're going to see that necessarily easily shift over to things like Ethereum and then into alts. But what we will probably see still is, risk capital from more of the retail traders that start to, seek higher returns, that want those like 10x overnight type of returns, right? The just crazy gains that are potentially on the table in some of these altcoins are naturally going to attract some of the riskier retail trading. So we will see some of that flow, especially if we get, Bitcoin continuing to rise, but then eventually stalling out. And then people may want to try to take bigger swings at riskier stuff. So I think I'm sure we'll see that dynamic continue to play out. But yeah, I wouldn't necessarily think that the institutional side in this part of the cycle is going to be pouring into alts or Ethereum. I could be wrong. I'm sure there's some hedge funds out there, smaller funds that are looking to deploy capital into non-Bitcoin assets, but I think that's going to be a relatively small part of the altcoin story this cycle.
It almost seems more likely that, like, all right, let's say, the average person allocates 1% of their investment accounts into Bitcoin ETFs. And then let's say Bitcoin 10x's or something, and it becomes, 10% of their fund. Nikki, like on the financial planning side, do you think more advisors would just like rebalance that down to 1%, and that would become selling pressure? Or do you think they would hold a higher percentage? Or
No, if advisors are getting involved, they have pretty strict, portfolio management strategies that they're following, and rebalancing is going to likely be the case, especially with the risk that, is there with Bitcoin volatility. They're not going to want to have a position get too big. So yeah, there will be selling pressure from the institutional side or the, asset management side for sure. I think.
Yeah,
okay,
we're still pretty early in a lot. I think one of the reasons why we're seeing so much positive ETF flow is that we're still early in this shift of advisors, actually giving allocations to their clients for these Bitcoin ETFs. But Nikki's right. At some point, this will become a negative, potentially, at least in the short run for Bitcoin price, is that there will be a point at which, Bitcoin stalls out or starts going down. And then some people that are active in these retirement accounts will actually start to sell. And we may see some net outflows from the ETFs, which then creates its own self-perpetuating narrative potentially on the downside. So I'm not like worried about that per se, but I do think people should be prepared for the possibility that for a certain amount of days, weeks, months, that the ETF flows could actually turn negative and create downward pressure on Bitcoin. And so that's something that people should just be aware of. I don't think it's anything to freak out about. But right now, obviously, the net inflows continue because we're still early in the adoption of the ETFs and of advisors putting their clients into initial allocations.
When all the millennials and Gen Zers go to retire, it's going to be like a flood of because it's all Bitcoin investors are mostly young people, right? So it's like when our generation gets there and we need to cash out for our retirement, that's when we might see some real movement.
Well, and it's funny because at least on Twitter, the lines are getting drawn pretty clear who's pro Bitcoin, who's anti Bitcoin. And,
oh, yeah.
Nick, I know you've been running into some pretty dumb stuff. And there's this guy, Brennan, who's a CPA who has some pretty gnarly takes. He said, imagine having crypto as your only hope for quote unquote wealth, and then some laughing emojis. And then Preston Pish says, imagine putting CPA in your name and not having exposure to the best performing asset in the past decade. And I was like, that is so perfect. Like,
Zinger.
imagine anybody in investment services or financial services looking at the best performing asset of the past year that survived half a dozen boom and bust cycles and shitting on that. Like, you've got to be either so dumb or blind or biased that it doesn't make any sense.
Yeah,
Yeah.
and we always say too, it's not zero sum. Like, it's not mutually exclusive. Like, you can invest in traditional assets and in traditional asset classes and yet still have an allocation. Like, people who act like it's an either or situation, or that, try to make it this us versus them mentality. I just find that so like small mind thinking.
Absolutely. Yeah, the tribal mind is just very strange. And Nikki, you want to talk about this tweet that you were sending out?
Yeah, I also want to say Brennan's a nice guy. He seems like a nice guy, but yeah, some of the takes are very, very biased. And that's one of the problems I'm seeing across many different influencers that are on Twitter saying the same things. But this one really got me because so Tyrone, he's in the financial services industry, and he tweeted he's pro Bitcoin, very pro Bitcoin, and he's basically saying that like the financial industry is not prepared for the wealth that crypto people are going to be bringing in a nutshell, right? Either the advisors aren't allowed to have anything to do with recommending Bitcoin, or they are getting these clients that have these very unique situations that they don't really know how to fully kind of handle tactfully. And what I was saying here is we are going to need to see a new age of people in the financial industry that understand crypto investors, understand their risk tolerance, understand that they are used to volatility in a way that advisors have never seen before. And they're also going to like for example, there was a reply right from the CFP, a certified financial planner, that basically said all opinion, but most of these people, meaning crypto people, won't be seeking financial advice or won't listen when they do. And basically, it's like building a practice around servicing lottery winners, right? To me, that was a jab. That was a jab from somebody that should be a professional in the financial industry towards the crypto community. We know a lot of crypto investors and a lot of crypto traders. We have a community with many of them in it with us. And they're some of the greatest people ever, right? And they do listen and they do want advice, and they are not just lottery winners or gamblers is what I, am gathering from that. And so I just very, very much disagree with that mentality that the financial industry is utilizing and labeling crypto investors in that way. Yeah, I get frustrated because people in our I love the people in our community and the people we know that are in this space, and they're great. And I don't think they deserve to have that kind of stigma around them,
Yeah, I mean, and to play devil's advocate, like, I get it. Like, there's a lot of crazy BS that happens in the crypto space, and there are a lot of people with the get rich quick mentality. But I mean, we're very close to a large group of traders and investors that do it the right way. So we see
Yeah,
that on a day-to-day basis.
true.
And on like the financial planning side, you talk to a lot of really wealthy crypto people that are doing it the right way, that are
Yeah.
tax planning, making sure they're getting all their tax, deductions and saving for retirement and doing everything right. But there is a pretty large group of people that are just really stupid with their money. And some of them get rich quickly and then they lose it, or they don't think about taxes and they screw themselves with that, or they just blow it all. So I think
But that
it's a
happens in
full range.
stocks.
Absolutely. Yeah.
I mean, that happens in stocks. We saw it with GME, we saw it with AMC. It's the same stuff happening. It's just, yeah, I just think it's across the board with that thing. And we, I guess, do have a better viewpoint from the people that we work with and have in our lives. But
I mean, look, crypto is like a viral disease. It even infected Travis. I mean, the poor guy, the stock geek has caught a serious case of shit coinery. So
Listen, if Elizabeth Warren coin doesn't go up tomorrow, I'm out. No, just kidding.
But it's like, you can do that. You can speculate within reason. You can speculate responsibly,
yeah,
exactly.
It doesn't mean
Yeah.
you're a bad person or you're not going to listen to good advice. It just, you do it responsibly.
Yep. Let's talk about alts. I mean, let's look at some more charts. So, I've been riding Solana since the $50 breakout. We actually broke above my first profit target here. Next major zone is up around 250. So I see a lot of charts like this that still look relatively young in the trend development. We first went into alt season back in December, and this has been a clear confirmation of follow through that started in late February. So I think that, sometime in March, we're going to get a pullback here. It's just, a normal part of the market cycle. So I am hunting for dips. I'm hunting for breakouts. I'm still holding 100% of my ETH position from when I was buying back here in the 2000s. So yeah, man, this so far is actually my most profitable year ever, and we're only 3 months into the year, so things are looking awesome, man. And I'll just tell you guys, if you're not in the community, go to wetalkmoney.com/community, because we have got a hell of a thing going right now. All right, so we've actually got to run pretty soon here, but just wanted to do more of like a market update with a few questions for this week's We Talk Money. Trav, Nikki, what are you guys looking forward to over the next week? What are you paying attention to? Do you see any trends, any risks? What should people be thinking about?
There's some interesting stuff happening in the stock market that I think is worth highlighting. Actually, one that's worth highlighting that crosses over both crypto and stocks is the MicroStrategy situation. MicroStrategy is trading at a pretty big premium to the value of the Bitcoin holding that's on its balance sheet. But what it's doing is it's actually continuing to take out more convertible debt to buy more Bitcoin. And it's doing so basically at that premium. So essentially, it's creating even more buying pressure in Bitcoin and even more buying pressure in MSTR stock itself. I mean, MSTR is up over 100% just in the last month, and it seems to be going up every day, like almost in a parabolic fashion. So this will work until it doesn't, but right now it's working, and the high short interest is also helping fuel this. So it's a pretty crazy dynamic to watch. I mean, we've also seen parabolic charts in the AI stocks like SMCI and NVIDIA do stuff like this. So there are situations like this that continue to happen. And so there's a lot of trading opportunity. Another thing that I'm seeing right now, of course, is gold and gold miners. I highlighted that in the Daily Doe and in our community as a potential trade where gold miners could play catch up to the strength in gold. So that's one we're watching. Chinese stocks are finally working. I think the last bull on China in the entire world in January.
That's awesome, man. Yeah, you were buying the lows.
Yep. And I think I've got a thesis on a couple stocks. Baidu, I mentioned on Twitter, mentioned in the community, where, we're just early stages of what I think could be a very interesting bull run there potentially. So yeah, definitely some interesting things we're honing in on that I think are just active opportunities that we should all be paying attention to and taking advantage of. So.
Awesome, man. Yeah. Nick, anything else?
Well, for me, it's retail. It's retail sales numbers that I think come out tomorrow. And then it's Lululemon earnings, and then it's Ulta earnings. So those are two big positions in my portfolio. And all of that is a good read on what the consumer is doing in addition to the data we've already gotten. So that's where you should look at that Ulta chart, by the way. It's fly. It looks really good. We'll see what earnings do. But
we do.
Yeah, that's looking nuts.
We do also, I should have mentioned, we have next week the Fed meeting, the March Fed meeting. Now, probably they're going to do nothing in terms of rates, but we could very well, see some commentary out of them that moves the market. So that'll be a big one to keep on everyone's radar.
Yep. Also, we had mortgage rates that are still falling a little bit, but they're still high relative to where they've been. So, yeah, I think all eyes are on rates over the next, 2 or 3 months.
Yep.
Yep. Cool. Yeah. And in the meantime, I'm just looking for bull market setups, managing my positions. My thesis this time around was larger position sizes on fewer trades. Back in the early days, like, the first real altcoin bull market, 2017, I was like shotgun trading. I had dozens and dozens of positions, which was good. But where I am in my, I guess, trading career and journey is trying to do less and profit more. And so just, man, the thesis that I had a year ago is just playing out amazingly well. I mean, hell, I can't even believe it's been a year since the first regional banking crisis. What day was that? That was like, yeah,
Around March 10th. March 10th or
Yeah.
so.
Yeah. So it was literally a year ago that we were buying here in the 19 to 20K zone. And I'm still riding part of that position, actually added on a breakout here above 30K. And whew, man, it feels good to just, do these like swing and position trades and then just let the noise kind of wash away and just ride the bigger trends.
Well said.
Yeah, man. All right, guys. Well, thanks for watching. A little bit of a quicker episode this week. But again, if you're not in the community, what are you doing? Come join us. WeTalkMoney.com/community. We've got a ton of video courses and we do weekly live classes. And we've got a Discord with alerts and watch lists and chat about all things building wealth. So jump in there and we will see you guys next week. Nikki, Travis, thank you for being here.
See ya.
And we'll see you guys next week.
Cheers.